All right, now, let's bring in our panel here to discuss all this. Peter Morici, University of Maryland, former chief economist, International Trade Commission. Brian Carney, editorial editor for the Wall Street Journal Europe and author of the new book, there it is, Freedom, Inc., a very good book about American business. We have Bob Lenzer of Forbes, and we have David Goldman, associate editor for firstthings.com. Hello, everybody. Brian Carney, what did you hear from Tim Pawlenty? He sounds like more of a supply sider and a king dollar guy than I heard a year ago during 2008, but I want to get your take.
He definitely made the right noises about capital gains cuts, but he's also talking about, tax credits for angel investors and venture capital. And, that's just more of sort of slicing the salami and slicing up the tax code and privileging this guy or that guy because you like what they're doing. You know what? Venture capitalists, angel investors, they don't need a tax break to do what they do. They do it because they love it, and they do it because they know how to make money doing it.
And they do it because they get a reward after tax if it's done right?
Exactly, because the profits are potentially enormous, and we don't need to carve out a tax break to get them to do that. And when I hear Republicans talking that way, it's just they're trying to play Santa Claus because they see tax credits are a cheap way to favor a particular person.
Cash. It's a cash disbursement. It's basically temporary tax credits, cash disbursement. David Goldman, welcome back to the program. It's a pleasure to have you on. What'd you hear from Governor Pawlenty on the dollar? Were you satisfied? American declinism? I mean, I worry that the dollar has become a symbol of American declinism. That doesn't mean it's irreversible, as Charles Krauthammer has said. But right now, it seems like that's the big problem.
The Federal Reserve, if you include the effective cheap reserves they're providing to the banks, is monetizing something like $1 trillion a year in federal debt. It's absolutely astonishing. So the dollar has been on a straight path downward. And as indicated before, this has had a temporarily positive effect in the stock market because it's made stocks cheap for foreign investors. About 80% of the stock market move this year is explained simply by the cheap dollar, and that can't last. That's cruising for a bruising. So you do have to stop fiscal recklessness. You have to stop this, having a federal deficit at 12 or 14% of GDP. He's completely right about that. I think there are, however, a couple of things that you have to do. We have to get exports going. And the other part of the supply side program, which Reagan never implemented, is what we need now. That's a fixed rate currency deal with our biggest trading partners.
A little spending restraint wouldn't be too bad either. David, you say that gold, we've had tremendous rally in gold. You say gold is a put option on American power, that Obama's declinism is promoting the rise in gold. You say gold is not an inflation indicator. It's a put option on American power, or, and let me paraphrase, American exceptionalism. Before we get to the other panelists, can you expand on that very important thought?
The dollar there are no good alternatives to the dollar, but if we keep monetizing $1 trillion a year of debt, the world will find a bad alternative, which is the barbarous relic, basically a barter system for commodities as an international reserve fallback with the collapse of the dollar. So the gold price should either be $500 an ounce, which is what world demand will put it at, or $2,000 or $3,000 an ounce, which is what it would have to be to serve world reserve needs. So the probability of the collapse of America's world position and a corresponding collapse of the dollar is priced into gold at about $1,060 today. And it's likely to keep going up as long as Obama runs foreign policy as if it were the Special Olympics.
The Special Olympics. It's like we want to be C-plus students with everybody else. That's the part
everybody
that really
gets a prize.
Me. We are not
equal.
C-plus students. We should never be a C-plus. We should be an A-plus student. When America leads, this is what Reagan taught me many years ago. When America leads successfully, particularly with economic growth, but also with security, the rest of the world does well, but when America falters, the rest of the world falters, David. Is that fair?
That's precisely correct. With the withdrawal of American leadership unilaterally, it's astonishing. As you said, no other president ever would have suggested this. The world is threatening to fall apart. We may have an Iranian-Pakistani war coming up. We have strategic crises breaking out in the world because everyone else is trying to figure out how they will act when the cat's locked in the cellar.
Cat's locked in the cellar. Peter Morici, Neil Ferguson, distinguished Harvard professor, says the Chinese have given up on the dollar. They are selling dollars, pure and simple. What's your thought?
Well, I don't think the Chinese want the dollar to crash, so they're not going to sell that many of them or they cut their own throats. But the global community, global investors are shorting the dollar. Essentially, the Fed is putting too much liquidity into the system. Remember, investors don't hold greenbacks, they hold bonds. And all those bonds we're printing, they're essentially being discounted by a falling dollar. But they haven't lost faith in America. That's why the stock market is zooming, because so many American companies make their money abroad. GE, Caterpillar, and so forth. So they're very happy to invest in American stocks, but they view bonds as a bad bet because they view this government as out of control.
You want the Chinese yuan to appreciate and the dollar to decline. You are essentially blaming China for the decline of the greenback. I don't get that.
Well, because the United States has such a large trade deficit with China and has to borrow so much abroad and has to have such a large stimulus package, the dollar is declining. Now, it can't decline against the yuan where we have a big trade deficit. It can't decline against the Middle East currency where we have a big trade deficit on oil, so it's over-declining on everything else. If the Chinese would revalue their currency, the U.S. dollar would rise against the euro as it falls against the yuan.
So,
Peter,
in other words,
why don't we make a deal with China and fix the yuan to the dollar?
Right.
Well, isn't that what we've done? Isn't that what we have
lately?
Now? Unilaterally.
But Peter Morici wants to break that.
Right. He wants the dollar to be cheaper. He wants America to be poorer.
I want the dollar to be cheaper against the yuan because it's out of whack in terms of what a dollar will buy and a yuan will buy, given all the productivity growth
I'm not talking about
for Chinese-made goods.
So we have an informal
we want
peg.
Americans
But then
to
we'll
be able to export out of China.
more.
You want
I'm
to make
talking
us
about a deal
vis-a-vis China.
I want to be able to export more to China, which means the dollar has to be fairly valued against the yuan.
What's
it's
that
not
mean,
an issue of whether exchange rates are
Let me
fixed.
interrupt.
It's a question of whether it's 685 or 4.
I don't understand fairly valued. You know, the Chinese have basically had a steady yuan. Now, they've dropped it 20%. They have appreciated it 20%. Now they're back to some kind of peg.
It's been pegged since
July. Their growth has
08.
been 10%. Their inflation has been less than 4%. These guys are doing a great job, Peter Morici.
We're doing a great job at being able to export 5-to-1 by having an undervalued currency. If you're going to have fixed currencies, they have to reflect relative costs, and they simply don't.
What we want from the Chinese is not just a peg, but for the Chinese to make the currency convertible and open their capital market in return for our help in a dollar-yuan peg on a formal basis.
So how does that,
so that the Chinese start importing from us in massive scale.
They should make it convertible. I'm going to get to Robert Lenzer in just a second. Have some patience, Bob. I'm sorry. But go ahead. David Goldman, all right. Chinese convertibility, I totally agree with that, but how does that affect the valuation of the dollar? How does that affect exchange rate? Do you think that means Peter Morici is right, or do you think Brian Carney is right?
We don't want to go around playing with exchange rates. We take it where it is, we fix it where it is. The Chinese open the capital markets, start importing massively from the United States, allow their citizens to spend money in a convertible currency which they trust, so they stop saving 50% of GDP. That's how we get done what Ben Bernanke was talking about yesterday in San Francisco.
He didn't talk about the dollar at all. I thought that was pathetic. He didn't talk about the dollar. Robert Lenzer, why doesn't the Federal Reserve defend the dollar and do what Andrew Barry of Barron suggested in their cover story? We had him on last night. The emergency is over. You can still be accommodative at a 2% interest rate, not a 0% interest rate, Robert.
Well,
what's your take on that?
I think it's coming, but I don't think it's coming right away because I think they're waiting to see if the recovery goes beyond 1 or 2 quarters, and then they will start raising the rates. But, you know, Larry, even if they raise the rates, they're not going to raise them so much that it's really going to defend the dollar. I mean, the dollar... You have to understand that if we are going to have a health plan and we are going to send all these troops to Afghanistan, and if oil is going to continue to go up in price, then there's going to be tremendous pressure on the dollar. Now, the Chinese aren't really selling the dollar. What they're trying to do is to diversify into investments that will protect them against the dollar's decline. So if they buy gold, which they've been doing, or buy oil, or buy natural resource companies, or buy other equities, that is their way of investing. We have to learn by the way that they're investing so that we can protect our own dollar holdings. So I think unfortunately King Dollar may become a duke
Well, I don't want Duke dollar. I don't want Rook dollar. I don't want pawn dollar. And Brian Carney, I want to ask you about that. Do we have to accept this decline in the dollar, which many believe symbolically and maybe practically is consistent with American decline? Do we have to accept that?
Only if we accept that America is in decline. The dollar is the reserve currency of the world because America is the most resilient and strongest and most dynamic economy in the world. And Lenzer got it backwards when he said that the dollar was under pressure because commodities are going up. Commodities are going up because people are doubting the dollar because they doubt America.
Bob Lenzer, he says you've got it backwards.